Yeah. We have people on. Okay. Good morning, everyone that's on our webinar this morning. We're going to be talking about how to better understand statements and online account access. And for those of you in attendance, we have a chat box. You can type questions in. I'm sure some people have questions about how to understand different types of statements that you have and what certain terminology may mean. So if you'll type your questions into the chat box, you should see it over on the side of your screen. We'll do our best to answer your questions as we go through. Also, I'm going to be sharing some links with you so you can download PDFs. One is how to understand your Pershing statements, and also how to get e-delivery with Pershing. Also, you can see our event calendar. All that's been shared with you as well. So if that's of help to you, I hope it is. You can use it to sign up for online account access. It's a step-by-step way. We encourage you to do online account viewing. You can continue to receive your statements, paper statements, and still view your accounts online. But a lot of our clients like to consolidate their statements. If you have multiple accounts at Pershing, if you have, for example, an IRA, a non-qualified account, a Roth IRA, even you and your spouse, you can put them all together in one statement. That way you're not getting multiple statements in the mail. And most people like to receive trade confirmations and voting proxies and prospectuses electronically, just because it gets to be a hassle to get so many different individual pieces of mail. And you can get your paper statements in the mail if you like to continue to do that, and then get those separately. So again, if you have any questions, type it into the chat box, and we're going to go ahead and get started here. I'm going to walk you through how the Pershing statement works first and a few other things. So our agenda today is going to be understanding key terms, how to read different account statement types, how to consolidate your account statements. And we're going to talk for a minute at the end about Investigo and a transition we're moving through to give you better online account access. So let's talk about some helpful tips on how to understand your brokerage statements first. Let me tell you about the relationship between Madison Avenue Securities, Security First, and Pershing. So Security First Asset Management, we're, of course, independent full-service financial advisors, and our broker-dealer is Madison Avenue Securities. Now, when you're securities licensed, you associate with a broker-dealer, so they make sure we're in legal compliance and everything like that. And they also make sure all our trades are done properly, and we have a relationship with them. We're technically a branch office of Madison Avenue Securities. Pershing is a clearing firm. They're who holds the assets. They're one of the largest clearing firms in the world. They custody trillions of dollars worth of assets. They report to the IRS money coming in and out of your account. They generate tax documents like 1099s that you receive. And so that's our relationship between us, Madison Avenue Securities, and Pershing. So a lot of times there's confusion as to how that relationship works. So we encourage you to get e-delivery for at least some of your statements that you get. You can get paperless delivery. I have shared with you, and you can see the link, e-delivery, and also understanding your statements. There's a statement guide that I shared with you as well. And there's instructions on there about how to get registered to see your statements online. And it's pretty straightforward. One thing you will need when you register to see your statements online is the organization number. And for everyone, it's going to be HKA. That's what you'll put in the field where it asks for your organization number. And if you already have online account access, you can always change what you want to have access to and what you would like paper. You just you can do that online, or you can reach out to us. Many people, as I mentioned, like to have a single logon where if you and your spouse both have accounts with us, you can use the same logon information to see all your accounts at Pershing, and you can log on and see whatever accounts you have with us in one spot if they're through NetX 360 there with Pershing. So with online account access, you're going to have faster access to tax documents. You can see all your trade confirmations, your statements are all stored there. And they do make you log in once every 120 days. If you don't, you're going to have to reset your password. And you can contact us directly and we'll help you reset the password. So I know sometimes if you don't log on, it's a hassle to reset it, but it's for security. We want to make sure your account's secured and no one's can hack in, so then make you change your password and log in at least once every 120 days. So when you get to the Pershing logon for NetX Investor, this is what you'll see. The first box at the top right, where it says in blue up there, where it says login, financial organization number, that's where you put HKA. Now, if you haven't registered, you see down below it says need an ID. You can click register right there, and it will walk you through how to do the online registration. So you can do it online and register everything paperless. Or you don't have to go paperless, by the way. If you just want to see your accounts and online, you can still get paper statements and see your Pershing account online. Now, one thing I want to bring to your attention is Pershing charges a paper statement charge for $1.25 per statement. And if you don't like that, you can go paperless and they don't charge for that. They're not the only ones that do that. Fidelity and TD Ameritrade and most larger custodians charge to mail out paper statements. So if you already have online account access, you can choose to change to paperless when you log in. It will ask you, do you want to go paperless? And you can do that. And I mentioned before, Select Link is what it's called when you want a consolidated statement where you can have everything all in one statement and one logon. That's called Select Link. Any questions yet? All right. Again, if you have questions, type it into the chat box there, and we're happy to answer them for you. Now, we always try to review accounts with you annually, semi-annually, or quarterly, whichever you prefer. And we're happy to kind of help explain how the statements work and what certain columns mean, which is what I'm going to be doing today as well. If you have a non-IRA account, you want to make sure you have something called cost basis. That is how much you paid for a certain security. If you don't see, or if it says not available for your cost basis, if you'll bring that to our attention, we want to make sure that the cost basis is provided on your statement. That way, whenever you have a tax document, you'll get accurate tax and accounting information. Without a cost basis, it's going to show you like you have a zero cost basis, and it would look like you had a much larger gain on your taxes than you really do. And we also have had questions, being that it's tax season, what it means covered versus non-covered cost basis. There are certain securities, for example, if you have investment bank notes or market linked notes that are held at Pershing, it's going to be considered a non-covered cost basis in some cases. And that means that Pershing doesn't report the cost basis, but we can provide you with the cost basis at tax time. If you see something on your tax statement that says this is non-covered cost basis, we need to provide you with the cost basis for that particular investment. So just a few things to watch out for. Again, this isn't going to be applicable to everyone. We have lots of different clients with different accounts and different investments. So, we want to make sure that we're covering as much as we can, but not everything's going to be applicable to everybody. So I've shared with you a guide called Guide to Understand Your Statements. It's a PDF you can see under Files. I think that's how it's titled in theirs. It'll be in your chat box. I shared with you not only this presentation, but a guide to understanding your statements and a PDF about e-delivery. So that will be a way that'll help you after this presentation to follow through with some things if you want to remember what certain terminology on your statement means or how to get e-delivery. Those documents will help you do that. All right, so let's take a look at the Pershing statement. This is what it's going to look like for the most part when you get it. It's going to have your account type up at the top. It's going to have your account number. And if it's an IRA or retirement account or non-qualified, that will be listed there as well. And what you're going to see is on the top right in the blue, it says portfolio at a glance. It has a beginning account value, In this case, it's $641,439.07. And then it has dividends, interest, and other income. That is the amount of dividends, interest, and other income you would have received during this statement period. So it's also going to show, when we've blocked it out for privacy reasons, we've blocked out the name on this statement, but it will show you the month that it's for. So, of course, this is going to be for 1 month period, what we're looking at here. Each statement comes generally monthly. Unless you don't have, if you have a mutual fund only account and there's no activity in your accounts, then you're not going to get a statement except for quarterly if there's no changes. Of course, you can always view it online if you want to see it in between statements. So after dividends and interest, it has net change in portfolio value. That's how much you gained or lost during that period of time. And then below, it shows the total estimated annual income that you would get in your portfolio at Pershing in this particular account. So this shows all that information. And down below, it has an asset summary. You can see blue and yellow and a little bit of green. The green is the cash and money market funds. It has the balance in there. In this case, it's $5,384. Then it gives you the breakdown of your asset classes, equities or exchange traded funds, and then a total. So that kind of gives you a breakdown of what you're invested in. Below that, you can see short-term gains and losses, net gain or loss. And then it says this period, and in this case, it's $1 and realized. And then year to date, if there's gains or losses in that account. Over on the far right, it's unrealized. Now, if you have a non-IRA account, there's two types of gains. Realized gains, that means it's actually been sold. That means the gain is locked in and realized. Unrealized means the account is up by that dollar amount, but it hasn't been sold yet. And so in this case, there's $41,427 in unrealized gains. There's short-term gains. That's gains that are less than a year. There's short-term losses. That means losses that have occurred that have been less than a year. And then, of course, realized means they've been sold. Unrealized, they haven't been sold. I know this is a lot of terminology, but I'm just trying to give you an overview as to what it means. All right, on the next page of this statement, let's look at the columns at the top, portfolio holdings. We've got opening date, quarterly, account number, activity, opening balance, closing balance, accrued income, income this year, 30-day yield, and current yield. That's all the columns that you see. So moving down the page, the information you see corresponds with the top header. So opening date, that's the date that this statement generated. So in this case, 10/31 of 2020. And then the quantities, the number of shares. So the first thing we're looking at is the money market balance. It says total money market. So we knew on the first page there was $5,340 in the money market. And then the activity end date on there is 11/30 of 2020, opening closing balance. So obviously we bought some securities in this account during this period of time because we started the month with $285,000 in the money market. New money may have come in that we deployed. And then the closing balance. So investments were bought, bringing the money market balance down to $5,340. Now, interest rates are ticking up now, but at the time of this statement, the yield is basically 0.01 on money markets. Now let's look below. Next, we have equities. And remember, 51%, according to the pie chart on the first page, 51% of the portfolio is in equities. What the term equities means is either stocks or ETFs. That's, for our purposes, what it will mean if you see the word equities. And then below, you'll see what types of equities. So we have common stocks listed first. So we have ABM Industries going down the left side, Amazon, BP, and let's use BP for this example, which is the bottom one. You can see BP, and we can see there's three different dates that BP was purchased in this account: April 8th, 2020, May 5th, 2020, and November 20th, 2020. And the number of shares is the next column, quantity of shares. And then we've got the next column is account number, the number associated with that, and then activity ending. You can see the total dollar amount. So $10,192 worth of BP in this situation. And then we've got closing balance. So BP went down over this month. It dropped down to $8,938. And if we think about it, this was during 2020. And so we had the pandemic going. So energy stocks dropped a little during that period of time. Moving over, we've got accrued income. And far right, we have the 30-day yield, and then the current yield at the very far right. 9.56% is the interest, that the dividends that BP pays over that period of time. And so, and that's what each of those columns means. And so you can see it's going to show you that for every stock that you own. Any questions so far? All right. Stop me if you have any questions. I'm just trying to give you an overview of terminology and what each column means. On to the next page, we have equities continued, but you see these aren't common stocks. We have real estate investment trusts. That's another type of equity you may own. This one is Blue Rock Residential Growth REIT. And the cost basis in this case isn't provided. So if you ever see that on your statement where it says unit cost NA, you would want to let us know so we can make sure the cost basis is entered in. Also, if something is purchased recently, it may not show up as well. So this could have been a recent purchase that's not in there yet. And then we've got market price. Market price for Blue Rock is $25, and there are $2,000 shares of Blue Rock at $25 a piece equals a market value of $50,000. And so on the far right, you can see the estimated yield. This one pays 6.15%. And in this case, it's a non-traded preferred stock. So you're not going to see fluctuations on your statement very often at all, if ever, for preferred stocks. So 6.15% is the estimated yield that you're getting from Blue Rock. And then below, it shows the totals for real estate investment trusts, your current cost basis, market value, unrealized gains, and then estimated annual income. For this one's $3,179. All right, below we have more equities continued. In this case, exchange traded products, 48% of portfolio. Now, what ETFs or exchange traded funds are, they're a fund that have a lot of different types of investments inside of it. So it's a diversified fund of different types of equities. So it's not just one stock individually. There's going to be multiple ones inside of an ETF. So the first one you see is ETFIS Series IntraCap REIT. So this is a real estate fund that owns a lot of different real estate investments. So it's a fund that owns different real estate trusts in this case. And it's estimated yield on the far right, 6.34%. And all the same columns are applicable. The quantity of shares, your current cost basis, the market value, unrealized gains or losses. All of that follows straight down the columns for each corresponding position in the account. So we kind of covered what those meant already. So I'm not going to go through each column again. But this is what the statement is going to look like for you. And the next page is exchange traded products continued. Next, we have gold. So gold is in this portfolio. We've got quantity of shares, the cost basis going straight across. And you can see the market value, unrealized gains and losses. Again, that is how much it's gained or lost. So unrealized means it hasn't been sold. When it's sold, it's going to be in a different category in the statement, and it'll say realized gains or losses. And then the last thing here is total portfolio holdings. Current cost basis of $572,000. That's the total for the whole portfolio of what was bought, and the current value $664,000. So that means this account has $41,427.38 of unrealized gains. If there were losses, it would show a minus. So that kind of shows you, since you've had this account, how much it's made across time. And then the far column is estimated annual income. So we believe in dividend paying investments and interest paying investments, coupons with bonds, that kind of thing. You will see estimated annual income. We try to keep income high because we like companies that pay out their cash flow and at a higher rate, if at all possible. So that's annual income is different than unrealized gains and losses. So the income is in addition to the gains and losses. So you want to make sure you understand you're not just getting the gains and losses, but also income on top of that. All right. Before we move to Allianz, any questions yet on how that Pershing statement works? Okay. Don't be shy with your questions. We're happy to answer them. So let's talk about Allianz statements. And we're not going to be able to cover all the different companies. We probably have roughly 5 to 7 that we use more frequently than others, but there are occasions, depending on your investment needs, which annuity or which insurance carrier we would use. Let's talk about first what a fixed indexed annuity is. Fixed indexed annuities are considered a principal protected investment. That means that your principal that you put in is guaranteed by the contract against losses. And so we like them for the safety that they provide. They give us the ability to take income when we need income from somewhere that's safe and stable. So in general, we like to take your income from somewhere that's not in the stock market. So if we have volatility in the market, we're not having to sell any shares at a loss. We would like to take your income from somewhere safe and stable. So instead of buying bonds, which is traditionally what a lot of folks have done over the years, is sold bonds, we don't really like to buy bonds in portfolios because they're interest rate sensitive. As interest rates rise, bond values fall. Annuities don't have that problem. The indexed annuity is going to give us bond-like returns, looking forward, likely to have much better than bond-like returns. And we like them because we can pull money out. We can take free withdrawals from them to provide you with income and keep your principal safe. So on the first page of this particular one, this is the Allianz 360. And you can see in the middle of the page that it's an IRA. The contract date on this is January 28, 2014. So that's when this investment was made. To the right of that, it explains what's inside the statement. Another thing I'll mention about annuity statements is generally you're going to get them once a year for fixed indexed annuities or fixed annuities. And that's because there's not changes. You only see changes once a year for that. All right, we have a question. Where would someone see the payment charge of $1.25 a month for paper statements? Okay, so that would be under expenses. It'll be near the end of your statement. The link that I shared, the statement guide, it's going to show you where you can see those expenses specifically. There's going to be a table of contents in there, but the $1.25 is going to be on the last page or around the last page before the disclosures that they have. It's going to show any expenses near the end of your statement. Yeah. Okay. So let's look at what the statement for Allianz 360 will look like. So again, that was the first page that we saw. On the second page, you're going to see something that says accumulation value of your annuity. That means what's it worth? How much has it gained? And what's the value now? So this one, it shows beginning accumulation value on January 28th of 2017, $293,760. And this one made $77,000 over the course of the year. Now, the Allianz 360 is a special case. It does have an annual benefit charge. So we would only use the 360 if you're going to take lifetime income. So this person is going to eventually trigger this account value to take a lifetime income withdrawal from it that will last the rest of their life. So that's where you see benefit charges. It has a 1% charge for the guaranteed lifetime income. If you don't own an Allianz 360, There's a few other products that have an income benefit charge, but I would say 90% of the ones that we use don't have the income benefit charge. But I wanted to show you one that does have it so I could explain what it's for. So if you see a benefit charge on an annuity statement, it's because it's providing you with some type of benefit. So like lifetime income is one. Some of them have living benefits that pay for long-term care or assisted living. They're called living benefits. And a few of them have death benefits as well. But in general, we would only use these benefits or have you pay a charge for one if you're going to actually use the lifetime income. So if you see that on your statement and you don't understand why it's there, please let us know, because we'll review it with you to make sure it's something you need. In many cases, we can either drop it or change it to something else. But when it was first presented to you, the reason it would have been presented is because you needed lifetime income or wanted that from it. All right. Next, how your accumulation value is allocated. Within these types of investments, you have different market indexes that we can link it to. With Allianz, we can change them once a year. If we think there's going to be a better performance from one index over another, we can change the indexes. Generally, we go ahead and diversify them from the start to the ones that have historically performed the best over time. So you can see here, this one has monthly sum S&P 500 index that earned $14,000, which is 20%. And let's take that back. It made, $14,919, which is 20% interest, bringing that monthly sum portion of the contract up to $88,203. And that represents 23% of the total investment. Let me explain what monthly sum is. So you may have seen things like annual point to point, monthly sum. There's some that have a participation rate. Monthly sum means they take each monthly performance every month, January, February, March, April, and they add them together over the course of the year. But if there's a really negative month, it can wipe out the returns. So monthly sum does really well if the market is trending upwards. You have a lot more upside potential with monthly sum than you would annual point to point if the market is trending upwards. But if we have one or two really bad months, it can wipe out the monthly returns of the other 10 months. So if you had 2 months with 10% losses, then obviously that would wipe out the gains that you have. The worst you can do in an indexed annuity is a zero. You can't make less than a 0% rate of return because your principal is fixed, hence the term fixed indexed annuity. All right, the next crediting method is annual point to point linked to the Barclays US Dynamic Index. So this is from 1 year, January 28th of 2017, January 27th, 2018, that index went up 28.63%. So that's what this contract earned. It earned $62,000 over that period of time. This is an exceptionally good rate of return. We generally shoot 5 to 7% for these, but hey, if they perform better than that, that's great. So that's what each of those means. So if you have any questions about your terminology on your annuity statement from Allianz, please reach out to us or shoot us a question right now in the chat box. Now with the Allianz 360, you have something called lifetime withdrawals available to you. And that means you can trigger a lifetime income payout based on your accumulation value. There's only one account value for the 360, the accumulation value. There's not two separate ones for income and your principal. It's all one. So in this case, this person was age 64 when it issued, and every year that they wait, they get an annual increase in their withdrawal rate of 0.44%. I'm looking in the middle of the page. We'll go back up in a minute and talk about option 1 and option 2. But every year that you wait on an Allianz 360, you get a larger chunk of your accumulation value for lifetime income. So right now, in this case, under option 1, 7.16% withdrawal rate. That means if they said, I want to turn this into income for the rest of my life, they're going to take the accumulation value, and if we back up and look at it, $367,835 is the accumulation value. You would get 7.16% of that accumulation value for the rest of your life. Now, if you take option 2, which is 6.16, it's less, But every year there's increases, you're going to get an increase in your income. So you wouldn't get a lifetime increase of $77,000 every year, but it's a percentage increase indexed to inflation. For all practical purposes, you're going to get an increasing income if you take option 2. It generally takes about 8 years for option 2 to catch up with option 1. But if you trigger it in your 60s and you're likely to live into your 90s, option 2 is a good option because it's going to catch up and surpass what your income would be if you chose the level income. Option 1 is level income for life. Option 2 is an increasing income. Under that, we see cash surrender value. If you break the contract, this contract was written in 2014. It's over in 2024. The Allianz 360 is a 10-year investment. You would get less money than what your accumulation value is because you broke the contract. You can see below it, though, on January 28, 2017, the surrender value was $267,000. So every year there's gains, your surrender value is going to increase. And also, every year of the contract, there's less of a surrender charge. So if you're in year 9 out of 10 for an annuity, your penalty is going to be much less than if you broke the contract in the first year. We never have problems with people being penalized from annuities. We keep plenty of money outside of them because you need safety, liquidity, and return. We don't put all our eggs in one basket. We got plenty of liquidity outside of annuities if you needed extra money. So that's what the cash surrender value is how much you get if you turned it in earlier, cashed out. Below that's the death benefit. That's how much you get if someone passed away. The surrender charge period does not apply if you take the death. If someone passes away, it's fully available to their beneficiaries immediately. You don't have to wait until the end of the term or anything like that. All penalties are gone. You get full access to the accumulation value for the death benefit. Okay, so next, if you own a life insurance policy, this example again is Allianz, but this is going to have the same terminology for any indexed universal life product. There's different types of life insurance. There's term insurance, which lasts for a specific period of time, usually 10, 20, and now 30 years. They have term policies, and you pay a level premium, and then at the end of that term, it's over. And the amount of money you paid would increase dramatically if you don't get a new policy. Now, these are permanent life policies that we're talking about here. This is not a term policy. This is something that is meant to be for life, right? If you pay the premiums and continue to or take distributions, as long as it's meant to be a permanent life policy, meaning it doesn't ever end. The death benefit would stay intact. Okay, so on this one, we've got the accumulation value inside the contract was $47,436. And then the premiums that had been paid in since this started, it was $24,225. So over this period of time, and this period would be 6/20 of 2016 to 6/19 of 2017. The statements today look exactly like this. They haven't changed at all. So we just used the same one. Interest credits of $7,211. So that's the internal interest that it earned inside of the contract. So this is an index universal life policy called Life Pro Plus. And you get index gains based on the gains of the index that it's linked to. Expense charges, or first let's talk about insurance cost charges. So when you have a life insurance policy, there's different types of expenses that aren't associated with annuities. So insurance cost charges are going to be things to cover the cost of the life insurance is one, and internal costs of the policy. In this case, there's $1,542 in expense charges. In insurance charges, there was $2,164. So internally, they're more expensive, but we're buying them for the purpose of either overfunding them, so you can eventually take a lifetime tax-free income from this. You can take a tax-free income from an index universal life policy, and actually you're borrowing it from your death benefit. Or if you don't do that, there's going to be a death benefit as well. And I don't see the death benefit on this one. probably be around $350,000 or $400,000, but it doesn't say on this page of the statement. Down at the bottom, we have net cash value. That is how much cash value is built up in the contract. And that's available to take out if you needed to take it out as well. These are the different crediting methods, the different indexes that we can link to inside of the contract. Every year we can change these. So the different columns show how much you have to each allocation, the current, and then the new premium. So this one on the second column, we changed it where 75% of it is going to the U.S. Barclays Dynamic point-to-point, and 25% will be the S&P 500 trigger method. That means if it's flat or positive, this one will give you an 8% interest credit, even if the index was only up 1%. So I won't get too much into that, but we can change these allocations every year, and they're available to you. Sometimes they add new ones, and we can look at that as well if it makes sense for you. This is just a breakdown of how each crediting method works. The participation rate, that means how much of the index gains do you get. 100% participation rate in that column means that you get 100% of the gains of the index. And then if it says 130, it means you get 130% of what the index does. Insurance carriers have created their own stock indexes that they use to buy options against. And they do that because if they create an index that's not very volatile, they can afford to credit you with a lot more interest. A lot of people don't know there's more stock indexes than there are stocks. There are thousands and thousands of indexes that financial institutions have created, and they buy options against those indexes in order to give people interest credits. And they do that to reduce volatility and bring down the cost of the options. So it can be complicated, as you can imagine, but there's all kind of different options inside the policy, and this just breaks down how each of them works. So if you have this and you have some in-depth questions about it, we can get together and talk about that. This is the same things, crediting methods continued. All right, so if you have I wanted to talk about a different type of annuity, still a fixed indexed annuity, but some of the terminology is different with some carriers. So if you have Athene, you're going to have something called the balanced allocation value. And if you have Nationwide, you also are. Balanced allocation value means where you're at on that day. Accumulation value means after it's locked in at an anniversary date. So on the Athene, this is the Balanced Choice Elevate 12. It was issued in 2017. $175,000 was put into it. So we can see the accumulation value under the summary of activity as of 1/30/2017 was $175,000. And then the accumulation value as of 1/30/2018 was $172,000. And in this case, they have an income benefit rider, which is something that was added on to this in order to give lifetime income. So that's why the accumulation value dropped from one year to the next. Let's talk about the next column, which says market value adjustment. Some annuity contracts, if the interest rates drop a lot and you surrender your policy early, you could have something called a market value adjustment where you would get back less than your surrender value, because if interest rates drop dramatically or go up dramatically, they're either going to adjust your market value adjustment up or down. In this case, it's zero, so it doesn't affect it. And then balanced allocation factor, that's what percentage of it is allocated to that particular index. Balanced allocation value is $198,176. So you can see that the reason I wanted to bring up this is the balanced allocation value is higher than the accumulation value, because this is a 2-year point to point, meaning it goes for 2 years instead of 1 year. So inside of an annuity contract, sometimes there's a 1-year period of time where you get interest credits, other it's 2, sometimes 3, but this one's 2 years. So you can see the term start date, 1/30/2017, term end date, 1/30/2019. So that's a 2-year period. So the statement we're looking at is in 2018. So it's in the middle of that term. So the balance allocation value is $23,000 higher than the accumulation value because we haven't reached the 2nd year anniversary date yet. When it reaches the anniversary date of 1/30/2019, those gains get locked in. So for example, if the balanced allocation value is $220,000 in 2019, that's going to lock in and then become the accumulation value. This only applies if you have longer than a 1-year strategy in your annuity contract. You're going to have something called the balanced allocation value, so you can see what it's worth on that day in between the term. All right. So this one is linked to the Merrill Lynch RPM index. That's the bottom thing you see there. And you can see the different prices for it. This again explains it on your statement, what I just tried to articulate to you, which each one means. So if you have an Athene policy or a nationwide policy, there's a few others may have a balanced allocation value. We've shared this presentation with you. You can keep this and refer back to those terms if you need to. All right, so nationwide is going to be similar. You can see on this one, the initial investment of $157,000 was made on 3/24/2016. Then the balanced allocation value, because we're not at the end of a term, is at $165,770. Now on the nationwide, they have 3-year strategy terms, and we can lock your gains in at any time during that 3-year period. So if somebody called me up and said, "Hey, I'm happy with $165,000, lock me in," we could do that, but you wouldn't start earning interest again until the end of the 3rd year. So we wouldn't recommend you do that. You would have gained money in the policy, but it's generally better to let it roll over and wait till the end of the 3 years and then lock in. So the balanced allocation value is what it's worth in between the anniversary date and then the end of the strategy term for the policy. All right. So any questions yet? Does anybody have any questions? All right. I think I'm going to try to pull up here this statement guide. How do I do that? Let's go over here. I'll stop this. I'm going to pull up a guide here. Okay. So this is something we've shared with everyone. It's a guide to understanding your brokerage account. At Pershing, this is going to be really in-depth and a good reference for you. Also explains how to go paperless on your statements. And it's got a summary. So anything you have a question about, go in here to this summary, and you can kind of see where to find it inside of this brochure. It shows you and explains in detail how to consolidate your statements, and pretty much everything I went over is going to show you in writing here. So if you can't remember everything that I just said, then you can reference this document to be able to get a refresher in the future. If you have a question about what something means on your statement, this guide will help you, and you can see it very easily. I won't go through all the pages, but if you have in-depth questions or something we didn't cover, because I kind of did a high-level overview, this should give you some guidance. And then the other thing I shared with you, I don't know if this is going to work. No, the e-delivery one won't. Okay. Was the e-delivery. You have a PDF I shared with you as well. So I want to wrap up. If we don't have any other questions, I was going to wrap up explaining our online account access. So we know we've had some issues with some folks that use Investigo. Investigo is our online account aggregator. And what that means is a lot of our clients have accounts at Pershing. Some of them have accounts outside of Pershing. Like, for example, they may own an annuity with Allianz or Nationwide or Security Benefit. They may have an account at AssetMark, which is another third-party investment firm we use. And so to make it easy for you, we've given you access to something called Investigo, which is going to show you the bottom line of your investment values. But we've had some issues over time with some of the links coming unlinked. And if you ever have that issue, you can log in directly to the custodian, right? If you want to see the most accurate information, log in directly to Allianz, log in directly to Pershing, or wherever the investment's held. But we're in the process of getting set up with what we feel is a better online account aggregator that's going to show you more clearly and hopefully have much more accurate details and be more user friendly. We'll have a mobile app. So I was going to make you aware of that. We're in the process of transitioning to that. And of course, you'll still have access to Investigo. And at any time, you can get direct access to Pershing or any other investment company you have. We can create a login for you to go directly there. All right. Well, I think that's all I was going to cover today. If we don't have any other questions, we're going to wrap up. We're going to save this presentation and make it available to everyone. And so I've also shared it with you. So please download it if you'd like. And if you have any other questions or need us to assist you with anything we've talked about, please reach out to us. I hope everyone has a great day and a great rest of your week. Take care.